Home prices remain at record highs and mortgage rates are climbing once again.
Now the question remains, is there any relief in sight for buyers? The housing market is our big story today. Although home prices continue to break records, they are rising slower, and it's at a slower pace because of loosening inventory and slowing demand. Experts now project further price growth deceleration next year. Meanwhile, even as many are still waiting for lower mortgage rates before they buy a home, pending sales data indicates at least some prospective buyers are starting to get into the market. In fact, Forbes Advisor says now might be the ideal time for buyers to get ahead of a potential surge in demand in 2025. It's one that could drive home prices up again and leave some would-be homeowners out in the cold. The average mortgage interest rate increased in 44 of the 50 states from the first quarter to the second of this year. In October, Wallet Hub released a report on the states where the mortgage interest rates are increasing the most. The top 10 are highlighted in red on the map. Colorado had the largest increase in the average mortgage interest rate at around 4.9%. This is significantly higher than the increase in the other states, with most increasing by less than 2%. States with mortgage rates increasing the least are highlighted in blue. Idaho right now sits last on the list with 1.1% decrease in the state average mortgage interest rate. And as for Ohio, right now we have about a 6.3% average mortgage interest rate. That is up 1.9% from the beginning of this year.
And the cost to borrow money has gone down slightly. The Federal Reserve approving to lower interest rates by 1/4 point this month, but mortgage rates still remain high. Jen Sullivan explains the reason behind those high rates.
The Federal Reserve announcing last week to cut the benchmark federal funds rate by 1/4 point, lowering borrowing costs for banks to 4.5 to 4.75%.
We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal.
The move will lower interest rates for things like credit cards, car loans, and other debt. But the one borrowing cost that hasn't gone down are mortgage rates. In fact, 30-year fixed mortgage rates inched up last week to 6.79%, according to Freddie Mac.
Mortgage rate hit 20-year high.
So with higher rates, why are prices staying high? Lawrence Yoon, the chief economist with the National Association of Realtors, says there's a lack of inventory. Fewer homes on the market means higher prices and more competition.
Home prices hitting new record highs with each passing month, and this is simply due to the fact that we have a housing shortage.
High costs are also hurting the housing market. The median home sale price last month was $418,700. That's more than 3% higher than last year, according to the NAR.
It's frustrating to see that, but it's not surprising.
It's especially frustrating for people trying to buy their first home. Only 24% of housing sales last month were first-time home buyers. But Yoon predicts some good news for buyers.
I think the new normal for mortgage rate could be something closer to 6%.
For Consumer Watch, I'm Jen Sullivan.
So the big question is, what do the current trends mean for home sales in Ohio? We have Eddie Campos with us, the president of the Northwest Ohio Realtor. So what impact are you seeing from the mortgage rates stalling?
You know, I don't know that we're seeing necessarily a whole lot of change. I think things are pretty much the same as I've seen maybe even in July. You know, mortgage lenders had already anticipated what was going to be happening with the interest rate cut, so they had already started to reduce the interest rates. So when that happened, I think the general public's thinking, oh, we're going to see this big splash, and already we were there.
So let's talk about Northwest Ohio specifically. You're mentioning that we're not seeing any big needles moving in either direction. What about housing prices? Are they actually going down?
Housing prices are actually up slightly. We're at about $231,000 for our average sale price year over year. I think the anticipation nationwide, I just came back from the National Association of Realtors convention in Boston, and the anticipation nationwide for 2025 and 2026 is that gains are going to be modest, somewhere around the 2% range for most people.
And when it comes to somebody out there who is looking to buy, there are a lot of anecdotal stories out there of people saying that they're still getting in bidding wars and there's not a lot of inventory to choose from. Is that the case in Northwest Ohio? And what advice do you have for somebody who's either looking to buy right now before the holidays or deciding, you know what, maybe let's wait till the winter or the spring?
Yeah, I think that when it comes to our current inventory, if I look at the screen now, we're at about 1,200 homes in 11 counties right now. That's not a lot. When we look at probably a balanced market, we should probably be closer to 4,000 or 5,000 homes. And when you're a buyer, I think there's a couple of things you need to do. The first is just to manage your expectations. Are you going to be able to get the home that has granite countertops, a brand new kitchen, brand new windows, brand new roof? Or are you going to have to settle for a little bit less and then maybe make some enhancements yourself, which in the long run, I think you make out better on as far as the value of the home. So if you want to have everything completely done, you're going to give a little bit more on the front end to be able to make that happen. So you're probably going to end up in multiple offers. Now, we may not be in the multiple offer days of having, 15 or 20 multiple offers, but we still may have 3 to 5 multiple offers, which is then going to force the price to go up. Now, if you don't need to have all of those things and you can accept a little bit less and do the work yourself, then you may be able to negotiate down the offer a little bit, maybe get some closing costs paid for, a home warranty paid for. Those things will be a great value for a buyer today if they can have the time to be able to make those changes later on their own.
Well, Eddie, thank you so much for your time and expertise. We really appreciate it.
Absolutely. Great to see you.
Many industry experts expect mortgage rates to decline next year, but those rapidly falling rates could create a surge in demand that then wipes away any inventory and causes prices to once again rise. Forbes expects that, and they add that returning mortgage rates would go to more of a normal 4% to 5% range, and it could also help the housing market. However, experts predict it could be a while before we see a return to those types of rates. As we get closer to the new year, we will continue to watch the housing market and keep you updated on any changes. You can stay in the know by downloading the 13 Action News app. It's available as a free download in your phone's app store.